Good afternoon and welcome. What I want to do this afternoon is give an insight to us as an insurance company and what we think makes us different, and try and give a case study and an insight. So here we go. Stuff you already know. We're a joint venture between 3 large banks, and we are the only exclusive bank-dedicated insurer in the Indian marketplace. We don't have any agents at all. It's 0, and that makes us unique. So in terms of distribution, we have, the company was formed in 2008, and we have some 7,000 branches which reach to every corner of India. We have, as I said, no agents, and when the business was launched in 2008, we were a regular premium only business. So typically bank assurance businesses or bank assurance is associated with a lot of single premium, and we're absolutely not. So the good thing about us, and we think, is that because you're a regular premium business, I describe regular premium as the gift that keeps on giving. And over time, you build up your premiums, you build up your customers, and you build up your assets under management. So if we look at the number of licensed branch staff we have across our branches, growing year by year since 2008, remembering we're only a 6-year-old company, you'll see a big jump in the last 2 years. And what we were trying to do there is significantly increase the firepower, the feet on the street that we have in our branches with our banks. And I'm moving towards at least 1 licensed branch staff, 1 SP or specified person per bank branch. So we have now over 4,500 licensed branch staff. The challenge that we have, and it's a nice challenge to have, is that actually our banks keep on opening branches. So Canara Bank is opening about 1,000 branches a year. Can you imagine that? 3 branches a day, every day, including Sunday. The good news is that helps us reach the furthest corners of the country, and it gives us great reach in our distribution. Just a quick look at our premiums. You see here that we are growing our premiums fast. We're one of the fastest growing life insurance companies in the country. And again, I think this is a combination of our 3 great banks having reach across the whole country, and also being able to build our sales force. So what we see here is we're the fastest to 500,000, 1,500, 2,500 crores, with the second fastest to 3,000 crores. We are doing this growth at a time when I argue it's actually harder than the people that came before us. People who started in 2001, 2002, they actually had if you will, the heyday. We turned up in 2008, same time as a financial crisis, followed by a change in regulation. So I'm very satisfied with the speed of growth that we've had. Assets under management, we're a 9,000 crore business, and this has grown year on year on year. And again, I think this is the regular premium strategy paying a dividend and showing how you can keep on the gift that keeps on giving. Profitability as well. We are one of the fastest companies to break even. Last year we made 66 crores of profit. In the half year we made 57. So we're seeing here that not only is this strategy one of good growth, but also profitable growth. And that makes customers confident, makes staff confident, and it makes shareholders happy. We have a fairly simple product range. I say that if you're in the cake business, you know, how many different versions of chocolate cake do you need in your shop window? So we have about 12 or 13 products across individual and group, and we split them into, you'll see here on the slide, 5 key ranges of protection, education, retirement, managing growth, managing wealth, and legacy. But we don't believe in having 40 products, because that's too many to manage. It's confusing for the customer, it's confusing for the salespeople. So let's keep it simple. So we truly believe in keeping our product range small. So this leads me into how we differentiated from the market or from a traditional insurance company. And all my friends from traditional insurance companies here, please forgive me, but I am going to make note of the differences between us, and it's not because I want to say one is good or bad. I'm just going to say I'm different. So The good thing about us as a bank assurer, and again, bank assurance for me is a business model. Bank assurance is not a channel. Bank assurance is taking the manufacturing capability of an insurance company, the distribution capability of the bank, and I say one hand washes the other. You know, one can't exist without the other one. So bank assurance can be multi-channel. It can be face-to-face, it can be digital, it can be in events and seminars, it can be mail. It's multi-channel. So if you'll forgive me and come with me, bank assurance is not a channel. What we have is we have the ability that through the banks and with the banks we know our customers. Our customers have a long-standing relationship with their bank, so this is not a cold call and direct marketing approach. It's a relationship-led approach from the bank that knows you. Needs assessment is done as part of the sales process. Again, the bank knows much more about a customer in terms of the deposits they have, the family situation, so there's a needs assessment done. And sometimes the answer is we're not going to sell an insurance product today. Sometimes the right thing to do is not to sell insurance. They say that, you know, when the only tool you've got is a hammer, every problem looks like a nail. And I think one of the beauties of working with the banks is the banks can offer a full range of products which includes insurance. And my goal is to make insurance just another bank product. So the products are sold on the basis of identified needs rather than a sales target and compensation. And as I said earlier, the channels are multi-channel. Okay, so this structure gives us an edge. And because we're a bank, because we're a bank assurer, we don't have any agents. We don't have 150 offices across the country. We've got 28. We share the bricks and mortar infrastructure with the bank, so that means we keep our costs low. And because we keep our costs low, we can keep our charges low, and we can give more value back to the customer. So that is our fundamental value proposition. Because we're a bank assurer, we have lower costs and we give the value back to the customer. So we've got this thing that we call the value diamond, and many of you may have seen this before, but the value in a product, the money has to go one of four ways. It goes to the distributor, it goes to the customer on the way in terms of entry charges and commissions, it goes to the customer on the way out in terms of exit charges and penalties, or the money goes to the shareholder for a return on the capital for underwriting the promise to pay. So getting this value diamond in balance and in some sort of equilibrium is important. If there's too much weight being given to one of those corners, somebody else is paining. Okay? So if the distributor's taking too much, there's not enough money to go to the customer. If the shareholder's taking too much, there's not enough money to go to the customer or the distributor. If the customer is taking too much, then there's nothing in it for the distributor, so they don't distribute, or the shareholder doesn't get enough for it, so the shareholder doesn't participate in the market. This is an uncomfortable compromise, this diamond, where it has to be an equilibrium, and everybody has to feel that there is a fair share, but nobody can get too much from it. When this thing goes out of balance, then action takes place. So, for example, perhaps in the ULIP environment pre-2010, we saw the regulator step in and take action and say, well, we're going to reduce the amount the distributor makes, and we're going to make sure the customer gets some more. So what do I mean by this? This is an example in just showing the IRRs of different products. And we abbreviate ourselves to CHOICE, so that's Canara HSBC Oriental Bank of Commerce Insurance Company Limited, because if we have to say Canara HSBC Oriental Bank of Commerce Insurance Company Limited too often, I run out of breath and we also run out of time. So CHOICE is nice and short. But what we see here is evidence of our strategy in action, where we give the customer greater value in terms of either increased allocation of investment or easier terms on exit, or kinder terms on exit, against our competitors. So the value proposition for the customer is, if you buy from your bank because your bank has lower cost, you get a better deal. So our smart monthly income product looks like that. Our smart money back plan looks a bit like this. And again, you can see evidence of the strategy in hard numbers coming forward for customer value. Sometimes people say, aha, but bank assurance is just done in, there's a misinformation going on that says bank assurance only happens in key branches. So here's the data, okay? Here's the data. And the data shows that in the last year, we sold through 6,287 bank branches. This year so far, and it's only halfway through, we've sold in 6,000 of our bank branches. In fiscal 2012-13, we sold through 5,000 branches. So here's the evidence, the data that shows that we can activate all our branches through Canara, HSBC and OBC, and that takes insurance to the furthest corners of India. The great news as the banks open new branches, and they're typically in the further neighbourhoods of the country for financial inclusion, insurance is available day one there without any additional cost. This is really important in terms of the financial inclusion agenda. Insurance is there day one without any additional cost. So here's the data and the evidence that shows that bank assurance can and does sell through the entire branch network and reach the whole country. But I'm a CEO, so therefore I'm never satisfied. And our opportunity is huge. I think we can agree that there are still great swathes of the country and the population that don't have access to insurance, so we can help take the message there together with a value for money offer. As an bancassurer, there are some challenges. My life is not easy. So the bank staff have many priorities. A branch manager might have 15, 20 different targets and goals to go for, whether it's deposits, CASA, NPAs, business lending. There are a number of different things of which insurance is one. As the banks grow, we have to grow with them. I'm sure everybody here enjoys anti-money laundering and KYC and customer due diligence. Those demands are only going to go up on us as an industry. We have to keep up with it. The banks are moving from a service into a service and sales culture. Banks have historically been a utility where money goes in, money goes out, and commercial borrowing has taken place. And I see, I've worked in many countries across the world, there is a continuum where everybody is growing and moving along the same path at different speeds in different places. And banks are going to be getting more into selling, they're going to be getting more into actually having to compete for business rather than handing out loans. And they're going to have to compete for deposits, and they're going to have to compete for non-fund income. We can help by adding insurance to the bouquet of products that the bank offers. Within our industry, we have a documentation-heavy process, and one of the challenges is getting the documentation right. So I think, again, technology is an opportunity which may help us, and I think that we need to see a trend in regulation to help enable the document trail become automated and digitized. So they say that what got you here won't get you there. And there's an interesting story for the industry. This shows the number of agents in the industry. And again, I'll offer my apologies, but some people may call me an agency heretic. So now I've declared my bias, I'll continue with my, my agenda. You see, there's been a lot of agents in this industry, but the facts are the number of agents are going down. So we're now at 21 lakh agents. We were at 29, 30 lakh agents 6 years ago. Agency is expensive. It's a big infrastructure to operate. And what we've seen over the recent years with regulatory intervention is that agency commissions are coming down. In fact, agency commissions are coming down. We see huge turnover in agency, so my question for the industry is, will agency's got us to this point in our evolution, but will it take us forward to the future? Equally, if I look at it from my own point of view as my bancassurer, what I've got here is the share of premium coming from the 3 different banks. So in the red is HSBC, in the blue is Canara, and the green is OBC. So what I've done in the recent 6 years is the business started with a big flow from HSBC because they were selling insurance before 2008 with Tata AIG as their provider. What we see now, and in terms of my growth, bearing in mind, think that there are something on the order of 7,000 branches, my growth has got to come from Canara and OBC. So we see a bigger share of Canara and OBC making up my premium. So I've got to be delivering service and enabling all of those 7,000 branches to be able to sell insurance to their customers. That's where I can get my biggest opportunity for growth. If you wanted some data, so HSBC has got 50 branches in India, so I'm never going to get another 20 crores a month out of HSBC. But by activating 7,000 branches of Canara and OBC, that's where my growth can come from. So what's the next phase for us? The next phase is to significantly increase the number of insurance company, my people, on the field who are supporting the banks. And we have a network of insurance sales managers. But if you want to activate licensed branch staff, and it's important that we get the bank staff to sell. Okay, this isn't a model where insurance people sit in the branch and do the selling. This is about adding insurance to the bouquet of products that the branch staff sell. So training managers, insurance product experts, people to organize events and customer meetings and presentations. So we can put a lot of people on there to support. But really the magic, and it's difficult, but the magic is getting the bank staff to adopt and accept insurance as another one of the bank's core products. So we're going to be reducing the number of branches covered by each of our insurance sales managers to deepen the penetration. And then we need to also embrace and expand digital so customers can take their insurance on their terms, at their convenience, at a location and speed that they want to do. So some thoughts about digital, and I'm trying to throw some thoughts out for you to think about and maybe challenge other speakers with this afternoon. I believe that in the future more insurance will be bought online. But the interesting thing about India is India is a mobile first. It's, you know, skip the desktop, maybe the laptop, but most of what goes on a piece of real estate this big. So how do you make a complicated documentation heavy product go through a piece of real estate digital that small? That is an interesting challenge, one that we all need to step up to, and we need some regulatory support so the regulatory environment enables digital transaction servicing and processing. Interesting question, how can we combine digital and physical channels? So it doesn't have to be only digital or only physical. How many people here research something online, find out a bit about it, and then go and actually buy in a store? Will insurance be like that? Can be. So we're using now tablets to begin the sales dialogue. We're doing application capture and processing and straight-through processing using tablets. We can see more digital servicing, more integration with bank systems. Again, because we are part of the bank, the more I'm trying to integrate and align my processes and systems with bank systems so that everything is available at 7,000 branches without incurring additional marginal cost. So what do I mean by this? So connecting, integrating. An old model is you've got the insurance company, you've got the bank, and there's a lot of running documents backwards and forwards and a lot of interaction between local offices, bearing in mind we've got a huge piece of geography here. So we've launched something which we call ChoiceNet, which is a portal integrated on the bank's intranets. So we connect the bank and the insurance company together, and we eliminate all of this running around between physical offices. Because again, you know, a branch may be 100 kilometers from the nearest insurance office. So we have to be able to make the bank branch the local insurance contact point. If I can do this, and if I can reduce my distribution costs, then I can give more value back to the customer, either in the terms of more allocation to investment at the front end, or kind of early exit charges at the back end, or I can give full value to a customer on early exit. Now, I think we have to recognize that the data tells us we operate in a country where few customers make it to the end of the policy. Fact, few customers make it to the end of the policy. So therefore, if we're going to treat customers fairly, how do we make sure that more people are able to get full value if they exit earlier? And we shouldn't be in the business of subsidizing the few by charging draconian exit penalties to the many that leave. I've only got a short amount of time, so I'm going to do some myth busting now. Okay, there's a number of myths that are associated with bancassurance, and I'm going to try and bust them away. I've already busted the one that says bancassurance only sells through a few branches. I've demonstrated to you with the data that bancassurance sells through the whole branch network. I'm going to show you that bancassurance has a lower incidence of mis-selling. I'm going to argue that the customer has plenty of choice, that the market actually needs economic growth and development to grow, and as India grows, insurance will grow with it. So here's some data. Can you see your company here? I've grouped the insurers together, and this is the complaints as a percentage of book in force that we see. So we see the predominantly bancassurance players, so ourselves, Star Union, Dai-ichi, India First, IDBI Federal, at the top in the green, actually have a lower incidence of complaints. People with a more of a combined model of agency plus banker, they sit in the middle in the orange, in the yellow, and in the sort of the pinky colour down the bottom here, people with a higher agency share seem to have a higher volume of complaints. So my data, and well, it's not my data, this is IRDA data. IRDA data illustrates that bancassurance has a lower incidence of complaints. Why is that? I think it's for a couple of reasons. Number one, because the bank has a relationship with the customer, you can't damage the customer because you'll damage the whole banking relationship. Bankers have a responsibility in a relationship to their customers, and so they're going to look after their customers. And they don't, number two, they don't have to sell insurance today in order to maintain the business. If the customer doesn't want insurance today, they don't have to sell insurance today. My analogy is, imagine you're at a party and somebody comes up and says, "Oh, would you like a drink?" And you go, "No, thank you, no, not today, not now." That doesn't mean you don't ever need a drink ever, never again. It just means you don't need a drink now. Similarly with insurance, in a banking environment, if the customer doesn't want insurance today, that's okay, because the bank's going to be there and the bank can meet that need when it comes through. Okay, let's look at some economic data and insurance density. I love insurance density. What I've got here is a spread of insurance density against GDP per capita, and you can see there's a clump of emerging countries down the bottom here. And let's face it, there's a difference between emerging countries and developed countries. You can't compare the two, and you can't say, why isn't India like UK or France or USA? The answer, because it's big, it's different, and it's emerging. So what you see here, and I've just exploded that bottom group here, is that there's a line here. You can see a trend that as GDP per capita grows, so does insurance density. And if you've got 80 crore people on less than $2 a day, actually they're not going to be buying insurance. Now, the priority for those folks are food, shelter, and perhaps livestock or crop insurance, but not life insurance. As the country emerges and grows, insurance will come too. But I think we need to separate cause and effect. If we look at urbanisation, it's the same sort of story. As a country increasingly urbanizes, so does the insurance density go up. If we look at Human Development Index, so Human Development Index, which is things like literacy, infant mortality, access to clean drinking water, again, as a country develops, so does their insurance density. So what I'm arguing is actually we will see growth in the insurance industry, and we will see growth in insurance penetration, not because we're going to sell more insurance, but we're going to see that as the country grows and emerges. So the priorities, and their slow burn priorities, are education, healthcare, sanitation, clean drinking water, managing an increasingly urbanizing India, and then we will see insurance density increase. So, key takeaways. What do I want you to take away from this? Insurance is a business model, it's not a channel. Complaints are fewer in bank assurance. Data evidence is that. Economics drives market development. Bank assurance has lower costs, and therefore the savings can be passed on to the customer in a greater value proposition. The more that as a bank assurer that we can integrate systems and processes to reduce our costs, the more value we can give back to the customer. And the final thought I'd probably give you is that activating branch networks needs investment of time, dedication, love, and constant attention. I can't take my banks for granted. I say that one hand washes the other. I can't live without my banks. I don't exist without my banks. You can't do the one-handed clap. Okay? So I can't exist without my banks, so I have to invest time, dedication, love, and constant attention. And if you're working with the banks, that would be my advice to you. So that clock says 0, and the next slide says thank you. So thank you very much.